I don't know, maybe, oh. Hi there. Of course, most people think about money as these pieces of paper or the amount in our bank account. So what's money? At various stages of ancient financial history, money was considered to be things like livestock, shells, salt, or beads. Not practical. They were just doing what they could. Most people today would say that money is this, but history as a whole would say it's this guy. But then again, we are in a new technological world. A new crowd of innovators are saying it's this. Obviously, each country has their own currency, but what is the best form of money? Let's go through it. To the lab. To start us off, let's focus in on challenger number 1, gold. Gold and its counterpart silver are a remarkable metal that, unlike many other metals on the periodic table, maintain their form over time. Gold is straightforward to produce if you know where to look, although it is energy intensive. Where is it? Both gold and silver have been a trusted form of money for thousands of years, but this doesn't mean that gold and silver have been free of manipulation. Near the end of ancient Rome's reign as world power, they were running out of money. So, the Roman authorities began shaving down existing gold coins so the clip-ins could be melted down with other metals to produce more. This practice was known as coin debasement, which basically reduced the value of the gold coins themselves, not necessarily gold. That's why some modern-day coins have these ridge patterns, so if someone shaved the coin, the manipulation would be obvious. Today, gold and silver are still manipulated through trading entities. For the average individual, storing it can be easy enough. A large value worth of gold will fit inside a standard shoebox, but the same value of silver needs a lot more space. So transporting it won't be fast and free. If the country you are in goes through something like hyperinflation, it's going to be particularly difficult to jump on a plane with your gold or silver and leave with it. Gold was the standard currency of the world for centuries, meaning that countries either use gold and silver itself, or agreed to convert their national currency notes into the value of gold written on the note. But not anymore. It was difficult for countries to produce extra units of their own currency because it was pegged to the amount of gold they had. You'd have to use one of these or these to get it out of the ground first. So, in 1971, this gold standard was completely replaced by the fiat money. Contestant number 2, the US dollar. Simple money, yeah? Even kids understand how to use it. This fiat currency has some secrets though. You might have heard people say, "Imagine I bought a house in 1940 for $3,000, but today in 2023, that same house is worth $450,000. That's a 150,000% increase in value. Only it's not. That's looking at it in reverse. It's not that the house has gone up in value by that much, but the value of the currency has gone down against the house. This is a form of inflation. Even though currency has been losing value over time, you'll still need it. Try going to the grocery store to buy a bag of flour for the sale price of $2.99, but instead of providing currency, you provide $2.99 worth of silver coins. Long story short, you're not getting your flour. Local currency's value can be easily tracked by the public. The value is right there on the note or in your account, and it's easy for citizens to measure, especially when compared to other money types. Why does this fiat money lose so much value? Remember the basics: supply and demand. Well, we can safely say most people want money. Why else would they work decades of their lives to get it? So it must be supply, lots of supply. So where does currency come from to get such high supply? Where is it created? It's not the government. The government can create government treasury bonds and bills, but you need currency to be able to purchase the new bonds and bills, so it doesn't end up adding more currency into the system. What about the Federal Reserve? Do they print money? Well, the Fed creates bank reserves, which the commercial banks have access to. But banks create reserves anyway to make a loan. And these loans are based on risk, and preferably low risk, not the Federal Reserve. The Treasury holds their account with the Fed too, but it's not like they couldn't keep an account with commercial banks. So technically, they do create currency, but it's not directly, so they aren't a requirement for currency creation. And even though QE doesn't create money, there's still reverse repo, Basel III, BTFP. But basically, to summarize, the Fed is less like this and more like this. Commercial banks are really the ones who are required. They are the creators of the currency. When a bank gives out a loan or they allow you to spend using a credit card, that adds to the currency supply in the system. So commercial banks are responsible for currency losing value over time? No, it's not that straightforward. When that debt is paid back, or even defaulted on, it decreases the supply. Once paid back, the currency is essentially destroyed. The digital numbers in the bank account just move back down to zero. The bank could be reckless with its lending and give loans to anyone, which is a larger inflationary force. But if those debts fail to be paid back, it's the same as destroying the currency. And the bank could go bankrupt. They don't want that, obviously, so they are careful who they lend money to. Those who are owed debt demand the currency, which is a deflationary force. So then, why does currency lose so much value over time? We need that currency debasement secret ingredient. We need the government. We know the government isn't the one that creates currency. Something else needs to happen to really raise the currency supply and really get inflation moving. Something like inefficient government spending projects. A government is capable of spending as much as they like. This is essentially creating money that doesn't need to be paid back. And it's not like that the person with the loan doesn't need to pay back their debt. But if debtors fail to pay, history tells us that a government will allocate taxpayer funds to cover what was lost. Like when we said before, making a loan is an inflationary force and paying it back is deflationary. Not paying back what was owed doesn't allow the reduction in currency, and bailing out the loan creator keeps the currency in the system and that inflationary force. It's no secret that the United States government has been spending big for a long time alongside the increasing currency supply. It's only a matter of time before the United States goes through hyperinflation, right? Look at the money spilling all over the place. It has to be right around the corner. Wait, what's this? It's another secret. It's the Eurodollar market, not euros, Eurodollars. This market produces US dollars outside the United States through bank loans. These loans have nothing to do with the United States. It has more than double the amount of debt that the United States owes. The Eurodollar market is made up of 70% of global United States dollars. For every $1 that a foreign bank holds, it has $10 in loans. Businesses in countries around the world transact with the US dollar, so they only have to use one currency because it's the most trusted, meaning out of all the currencies of the world, it stinks the least. The way it happens now is, as an example, Brazil to sell its iron ore to China, payment isn't settled in Brazilian real or Chinese yuan. It's settled in US dollars. Under this system, there will always be demand for US dollars compared to other fiat currencies, until this momentary system collapses. But we're not there yet. Remember that paying back or defaulting on debt has a deflationary effect, meaning supply is shrinking as the debt is paid back, or demand increases if there is a default as the bank scrambles to find US dollars to cover the debt while supply is low. This default cycle is critical to understand. I know the common view is because the United States prints so much money that one day it will hyperinflate. But to do that, it would need to have much more spending of currency directly into the system. because demand for other currencies is nowhere near as high as the US dollar. If the banks of those countries fail to meet their debt obligations, they must sell whatever they can to cover their debt. Whereas the United States dollar has so much global demand that the US government can cover the loss without blowing up the currency. Because all currencies, including the US dollar, lose value against the stuff we need, the poor and middle class suffer loss the most. Do we potentially have a replacement today? There are many today that believe we have a new money for the modern world. It's contestant number 3, Bitcoin, the superstar of cryptocurrencies. Inspired by the fall of the financial markets in 2008, Bitcoin was created in 2009 with the intent of being a digital currency, a currency that is decentralized, fair, and free of manipulation, running off a blockchain network, having a fixed quantity of 21 million, and it doesn't require a bank or administrator. It's Bitcoin's network that makes it so strong. So far, since its inception, the network has never been hacked, which gives a line of confidence and security to those who own the Bitcoin. And investors who have held onto Bitcoin from the early days have reaped the rewards. Since its beginning, the price rise of Bitcoin has been astronomical, with early days starting at a fraction of a penny per Bitcoin in 2009, and skyrocketing to highs of over $68,000 per Bitcoin in 2021. Putting this in perspective, if you invested $100 on the 17th of July 2010, when the price was 9 cents a Bitcoin, this bought you 1,111 Bitcoin. If you never sold, at the highs that Bitcoin was worth over $750 million. A historical, life-changing amount, and although awesome, the rise has had times of being a little bumpy. Bitcoin is volatile, moving as much as 10% in a single day. March 2013 saw highs of over $1,000, then went down below $200 in January 2015. From highs just under $20,000 in December 2017 to fall again below $3,300 in December 2018. And from the highs of $67,000 in 2021, it dropped down to $15,000. But the trajectory has been higher lows and higher highs. Whether it continues or not is another story, but the trend is up. So based on the historical price movement of Bitcoin, it has been incredibly strong. But how does this function as money? So far, not great. There are many who say Bitcoin should replace the US dollar as the world's reserve currency. There are many smaller reasons, but one big reason it can't be money yet. We'll start with the smaller issues. The price movement. Simple. If Bitcoin is going to make huge gains over time, there will be many who won't want to sell their Bitcoin for things. Little to no spending means a weak economy. The next smaller issue is the existing network effect. If Bitcoin is replacing the US dollar as reserve currency, then every piece of accounting software infrastructure around the world will need updating to use Bitcoin in lieu of the US dollars. Not impossible, but a colossal task. Small concern number 3 are Bitcoin whales, who have a majority of the whole quantity of Bitcoin themselves. Although the estimates of the top 1% of Bitcoin addresses own 90% of all Bitcoin are unlikely, there are few who do own the majority of Bitcoin. This gives a lot of power to the whales to manipulate the Bitcoin market price if they wanted. Not saying they are, but it is possible. Small reason number 4 is Bitcoin as money excludes those aren't good at using technology. Being such a private network, making a mistake on a Bitcoin transfer could mean those funds are lost forever. You will likely not know who you have sent them to if the address is incorrect. Those people will have to trust someone to help them with their Bitcoin storage, but this isn't a flawless strategy either. But here's a major issue with Bitcoin. It doesn't have a bond market at the moment. The ability to create credit or debt in Bitcoin is not practical with its heavy price rises and falls. As an example, let's pretend it's 2015 and 1 Bitcoin is worth $300 per Bitcoin. We are going to use our Bitcoin to purchase a house valued at $150,000. But this is a Bitcoin world, so it's valued at 500 Bitcoin. But we only want to spend 100 Bitcoin because we have diamond pours. Well, I guess a diamond poor because we are still spending our Bitcoin. But anyway, we will get a Bitcoin denominated mortgage of 400 Bitcoin at a 30-year fixed rate of 4%, which means the repayments are 1.91 Bitcoin a month, starting with a 16% Bitcoin per year in interest. Moving forward into the end of 2016, Bitcoin's price has more than tripled, hitting $966 per Bitcoin, which is fantastic if you own Bitcoin, but a nightmare if your debt is in Bitcoin. The monthly 1.91 Bitcoin repayment in dollar terms has jumped from $573 to $1,845 in 2016. And if we move into what that debt looks like at the end of 2021, assuming that all payments have been made, the mortgage repayments got as high as $127,000 a month, when the purchase price was $150,000. Nasty. Bitcoin could more appropriately be used as collateral to get a loan, but this means that Bitcoin is more of an asset rather than money. While Bitcoin is experiencing these sorts of price volatility, it is not an appropriate form of money, especially when some Bitcoin commentators are anticipating the price to be $500,000 per Bitcoin in the future. Maybe it can one day when all 21 million Bitcoin have been distributed, but that is a long way away. So what is the best form of money? If we go by the global network effect, it is without question that the US dollar is the most popular mechanism for global trade, money. But this question is too complicated to say at this stage because every option has issues. I think the more important question to ask is, does money make you wealthy? I don't think money makes you wealthy. Stuff makes you wealthy. We should think about money as the representation of excess productivity. Essentially, the effect which goes into making a product or service is valued by a promise, which is money. That's all it is, an agreement that there are a certain amount of working hours of value in that currency transaction. But if we are stuck on a desert island with nothing but enough gold, Bitcoin and fiat currency to buy whatever we want, with no phone to call for help, no other islands nearby, and no drinking water, all alone, how happy would you be? I'll let you think about that. Personally, I would much prefer to be stuck with a supply of water and fishes in the hope that I will one day be rescued. But of course, on top of that, I'd like to be around the people I care about the most. Money is of course important, but it's nowhere near perfect. That's why we should think about these things through by keeping cool, staying humble, and being kind to all, even behind closed doors.